Okay, so you guys have sent in some really interesting stuff lately, articles and pieces about, how to keep your wealth safe in these kind of crazy economic times, and, what are some smart moves you can make beyond just, letting your cash just sit there in the bank.
Yeah.
So what we're going to do today is kind of the goal of this whole deep dive
Yeah.
is to really pull out the most valuable insights from all this material that you've been reading
Right.
and really give you a clearer picture of kind of how you could protect and maybe even grow your wealth in ways that you might not have thought about before, going beyond just those typical savings accounts.
Absolutely.
We've got articles here covering all sorts of different investment approaches, the downsides of having too much cash on hand,
Mm-hmm.
and this whole spectrum of alternative assets that,
Mm.
maybe we should all be thinking about. So we're going to dig into things like how inflation really eats away at your cash,
Mm.
different types of assets that can maybe act as a shield against that.
Yeah.
We're talking real estate, commodities like gold, the stock market,
Yeah. Yes.
collectibles even,
Yeah.
and, even the idea of owning a business, right?
Absolutely.
And then on top of all that, we'll also touch on some of those more kind of modern ways to move away from using physical cash
Yeah.
for your everyday spending.
Right.
Things like digital wallets and contactless payments.
Mm-hmm.
And we'll even touch on cryptocurrencies.
Okay.
And of course, no conversation about protecting your wealth would be complete without talking about diversifying your portfolio
Yeah.
and making sure that you're rebalancing it to, stay on track. So are you ready to jump into all this?
I am. Let's get into it. It's a really important conversation to have. And I think one of the things that really jumps out from the start is this kind of conflict between this feeling of security that we get from cash, right? Like we want to hold on to it. It feels safe, it feels tangible. But then you have this other side of it where, the realities of the current economy and what your sources are saying is that cash is actually extremely vulnerable.
Yeah.
So that tension, I think, is really fascinating.
It's so true, right? Because like you said, it feels safe. You can see it, you can touch it.
Exactly.
But one of the things that all these sources really emphasize is that cash it's steadily losing its value.
Yes.
They talk about the fact that there's so much more money in circulation now than there used to be. And what that means is that each dollar you have just doesn't buy as much as it used to.
Right.
It's almost like a bar of soap. The more you use it, the smaller it gets.
Yeah, that's a great analogy. And if we connect that back to the larger economic picture, that increase in the money supply is a major factor in inflation, right? When we have all this money chasing the same amount of goods and services, prices are naturally going to rise.
Right.
And that means the purchasing power of the cash that you're holding is decreasing. Yeah.
Exactly. And it's not even just inflation that we have to think about.
Right.
One of the articles that you sent in actually mentioned concerns about the stability of the banking system itself.
Yeah.
And they even talked about a few regional banks that have actually collapsed recently,
Mm-hmm.
which, when you see that, it definitely makes you stop and think about where is your money safest, right?
It does. And while I think, the larger financial system does have a number of safety nets, these recent events are definitely a stark reminder that even long-standing institutions are not completely immune to these kinds of disruptions and instabilities,
Yeah.
which, I think it raises an important question for everyone to consider is how much exposure to that type of risk am I really comfortable with?
Exactly. And then there's the most basic thing, right?
Yeah.
Which is that the interest rates you get from a savings account,
Right.
they often just don't even keep up with inflation.
Right.
So even if your balance is going up a little bit, what your money can actually buy is still going down.
Well-
It's like, trying to walk up a downward escalator. You're working hard,
Yes.
but you're still losing ground in terms of your real buying power.
Precisely. It's the subtle but continuous erosion.
Right.
And your sources also touched upon some of the more practical, drawbacks of relying too heavily on physical cash.
Yeah.
Things like the risk of theft, right?
Right.
The inconvenience of having to go to the ATM, sometimes having to pay fees for that,
Yeah.
and the lack of any kind of protection or tracking if your cash is lost or stolen.
It's true. So it's like there's all these disadvantages to holding on to too much cash.
Yeah,
It just makes sense to start exploring some other option,
absolutely.
right? And so that's exactly what these sources do. They delve into all these different types of assets
Yeah.
that have the potential to not only hold their value, but maybe even increase it over time.
Right.
So they can potentially outpace inflation. And I think a good place to start is with real estate, because I think this is something that a lot of people kind of understand and can relate to.
Yeah. It is. I think, a very accessible concept for a lot of people. And I think what's really interesting about real estate, specifically as a hedge against inflation, is that it has kind of these multiple layers of appeal, right? So your sources highlight the potential for appreciation simply because of the basic economic principle of supply and demand.
Yeah.
Land is a finite resource. And in many parts of the world, particularly, desirable areas, the demand for housing continues to increase. So, as you alluded to earlier, when we have, more money essentially chasing a limited supply of homes, prices naturally rise.
And that's a good point because one of the articles even mentioned historical data that showed that home prices have actually increased at a rate faster than the general cost of living since the 1970s.
Right.
So it's a pretty strong trend.
It is a very strong long-term trend to consider. And I think it really emphasizes the potential for real estate to not just keep pace with inflation, but actually outperform it over the long term.
Right.
Your sources also pointed out that, real estate can generate income through rental payments,
Right.
right? Which is really interesting because as inflation rises, those rental payments also tend to increase, landlords can adjust.
Right.
So you have this built-in mechanism where your income from that asset can actually keep pace with rising costs of living.
Right. Which I think brings us to one of the things that people find really appealing about real estate is the idea of leverage.
Right. Absolutely.
Right. So you had this example in one of the sources about putting down, say, $100,000 on a $500,000 property.
Right.
And then if the value goes up, even just 5%, well, that 5% increase on the total value of the house
Yes.
translates into a 25% return
Exactly.
on your initial investment.
Absolutely.
So that's pretty powerful. It's like, using a lever to move a much heavier object.
Yes, exactly. And I think that leverage is really the key to, the kind of amplified returns that people see in real estate when the market is going up.
Yeah.
But it's equally important, and your sources do mention this, it's important to remember that real estate is not without its risks, right? So the flip side of that leverage
Right.
is that if property values decline, your losses are also amplified.
Right.
And, thinking more broadly, even though your sources don't specifically mention it, interest rate fluctuations, they can have a significant impact
Yeah.
on affordability and on, how much people are willing to pay. So
Yeah.
that can have a knock-on effect on the market.
Right. So real estate has got the potential for appreciation and for income
Right.
and for this leverage. But it definitely comes with its own risks.
Absolutely.
So let's shift gears now and talk about another, I guess, more traditional way that people think about protecting themselves from inflation, which is, commodities.
Right.
And in particular, I think a lot of people's minds go to gold and silver.
Right.
It always seems to be part of the conversation when there's any economic uncertainty.
Yes, absolutely. And I think that is for a good reason. I mean, historically, precious metals like gold and silver have acted as an effective hedge against inflation
Yeah.
because they are inherently scarce, right?
Yep.
When the value of traditional currencies declines, like we see during inflation, these finite resources, they tend to retain their value
Right.
and often even increase in value. And gold in particular is often perceived as a safe haven
Yeah.
during times of, broader economic turmoil.
Right. But I think it's really interesting. One of the sources you sent, they included Warren Buffett's famous argument against gold,
Right,
which is that, gold doesn't actually produce any income,
right.
like a stock does, for
Yeah.
example.
Yeah. And that's an important point to keep in mind, I think.
Right.
I mean, while gold can, as you said, be really valuable in protecting against that immediate sort of devaluation of cash during high inflation,
Right.
it doesn't generate ongoing income the way, like you said, a stock that pays dividends might,
Yeah.
or a rental property might.
Yeah.
So while it might be good to sort of safeguard against that short-term kind of cash erosion, the data really does seem to suggest that stocks and real estate tend to offer better long-term growth potential.
Yeah, that makes sense.
Mm-hmm.
Now, your sources also touched on what are called industrial commodities,
Right.
things like cobalt and nickel and copper.
Right.
And they noted that demand for these materials is really increasing.
Yeah.
For example, they mentioned cobalt, which is used in batteries
Right.
for electric vehicles,
Of course.
and that the price of cobalt had more than doubled in just the last 10 years.
Yeah.
So how does somebody even invest in that kind of thing?
That's a great question. Investing in physical industrial commodities, directly can be really quite complex.
Yeah.
But as your sources suggest, one way to gain kind of indirect exposure to that market is by investing in the shares of mining companies
Right.
that are the ones actually extracting those materials,
Right.
right? Or through what are called commodity futures contracts,
Okay.
which is basically an agreement to buy or sell a specific amount of a commodity
Yeah.
at a set price, on a future date.
Yeah.
But those can be, quite a bit more complex, and they carry a higher degree of risk.
Right. Okay. So commodities, particularly precious metals, they can offer some protection,
Right.
especially in those kind of uncertain times.
Yes.
But they might not be the best option if what you're really looking for is that kind of long-term growth that you can get from something like stocks or real estate.
Right.
So let's talk about stocks,
Okay.
because they're often seen as that, primary vehicle for building wealth.
Yeah, absolutely. And I think your sources are, they're spot on in positioning stocks as a really powerful tool for long-term wealth creation.
Right.
The historical average annual returns of the S&P 500,
Right.
which are in the range of 8 to 10%,
Yeah.
they really illustrate that long-term growth potential.
Yeah.
But I think it's also important to acknowledge, and your sources do this, that the stock market, it's not a smooth ride. There is short-term volatility.
Right.
And those dips during economic downturns, they can be, really unsettling.
Yeah.
But if you look at the long-term data,
Yeah.
it really strongly supports positive real returns, especially if you factor in things like dividends.
Nice.
And as one of your sources pointed out, historically, the probability of experiencing a negative return if you have a diversified portfolio of U.S. stocks
Yep.
over a 20-year period has been very low.
Yeah. And you made a really important point there, which is that it's not all just one thing. It's not all just stocks.
Right.
Because there are different kinds of stocks with different levels of risk.
Exactly, yeah. Your sources talk about this, and you used this example earlier, kind of the potentially higher growth but riskier stocks.
Yeah.
Like some of the ones we see in the tech sector.
Right.
Compared to some of those more established, maybe slower growing, but more stable value stocks.
Right.
Like in the industrial metals sector, for example.
Right.
And I think one of the things that your sources mentioned that I think is worth highlighting is this idea of investing in dividend-paying mutual funds
Right.
as a way to gain exposure to potentially more stable returns in a diversified way.
Right. Okay, so stocks, it seems like, in general, are a good long-term bet.
Right.
But you got to ride out those waves,
Yeah.
those ups and downs.
Absolutely.
And you got to make sure that your portfolio is diversified.
Right.
Now, the next category is a little bit more, I guess, unique.
Yes.
It's collectibles, right? We're talking about things like rare coins, stamps, vintage magazines.
Yeah.
Can these really be a reliable way to protect your wealth?
Well, they certainly can be. And as your sources highlight, I think the key factor that drives their potential to appreciate in value is their inherent limited availability.
Yeah.
That example that your sources use of the Paul Newman Rolex Daytona,
Yeah.
that was purchased, for a very modest amount and sold for millions of dollars.
It's a crazy story.
It's an amazing story, and it really does, I think, exemplify the kind of potential for substantial appreciation that exists in that market.
Yeah.
Your sources mention a whole range of interesting items, from sports memorabilia to rare art, luxury watches, classic cars,
Yeah.
even first edition books. And I
Yeah.
think the key, to their value is often their history, their provenance, and their condition, right? How well preserved they are.
Yeah. But I was looking at this and thinking about it, and one of the things that your sources mentioned, which is definitely a drawback, is what's called liquidity.
Right.
So you can't necessarily turn around and sell these things quickly if you need to.
Yeah, absolutely.
Yeah.
That's a major consideration.
Right. And then I would imagine there's also this risk that, their value could fade if trends change,
Right.
or if it turns out that they're not as rare or as authentic
Exactly.
as you initially thought they were.
Yeah. And I think that's a good point,
Yeah.
The collectibles market can be very specialized and subject to shifts in tastes and preferences, and things like verifying authenticity, making sure that these items are stored properly to preserve their value. Those are all important considerations.
Yeah, for sure.
But I think there's also this really interesting development that your sources highlight,
Okay.
which is the emergence of platforms that allow for fractional ownership of collectibles. So companies like Whatnot or Masterworks, for example. This allows people to own a share of a high-value item
Yeah.
without having to purchase the entire thing.
Yeah.
So it's really opening up this asset class
Yeah.
to a much wider range of
It
investors.
makes it a lot more approachable. Yeah.
Exactly.
Okay, so collectibles,
Yes.
they have the potential for these really high returns,
Yeah.
but you're also taking on a certain level of risk.
Right. Right.
And you have to, like you said, pay attention to things like authentication and proper storage.
Absolutely.
Now, the final asset class that we're going to talk about, which I think is really interesting,
Yes.
is owning a business. And this feels like a much more hands-on way to control,
Right.
your own financial destiny.
It is. I mean, your sources really emphasize the significant potential for revenue generation and cash flow
Yeah.
that comes with owning your own business, as well as the possibility for the business itself to appreciate in value over time. And one of the things that's particularly relevant, I think, when we're talking about inflation, is the ability that many businesses have to adjust their prices.
Right.
So your sources use Coca-Cola as an example, companies with strong brands.
Yeah.
And consistent demand for their product, they can often raise prices, even during tough economic times.
Yeah, because people still need their Coca-Cola, right?
Exactly. Right. So it's this idea that they have a little bit of flexibility to kind of adapt to that changing environment.
Right. And your sources also noted that, in some ways, businesses, much like real estate,
Right.
can actually benefit from inflation
Oh.
because of that increased demand
Right.
and that flexibility to adjust their pricing.
Exactly. And that's a key point. I mean, a successful business is a dynamic asset, right?
Right.
It's something that can adapt to changing economic conditions and can generate wealth
Yeah.
in a variety of different ways.
Okay, so we've looked at all these different types of assets.
Right.
Real estate, commodities, stocks,
Yeah.
collectibles, businesses,
Mhm.
as potential strategies to, maybe fight back against inflation
Yeah.
and potentially grow your wealth beyond, just your basic savings account.
Absolutely.
Now, I know that your sources also delve into some really practical alternatives
Right?
to holding physical cash
Mm-hmm.
for your day-to-day transactions.
Yeah.
So tell me a little bit about that.
I mean, I think this represents a really important evolution in, how we think about money and how we use it.
Yeah.
Your sources highlight the growing convenience, the security, and the trackability offered by digital wallets.
Right.
Apple Pay, Google Pay, Samsung Pay, for example.
Yeah. It's amazing how quickly these have just become kind of commonplace, right?
Absolutely.
It's just so much simpler to, just tap your phone to pay
Right.
than to dig around for cash or even a physical card.
Exactly. Yeah.
And they've got all these great security features. They use encryption, and they've got your fingerprint or facial recognition, which definitely feels like a step up in terms of safety.
Absolutely. Although I think it is worth noting that, it's still important to use strong passwords for your devices.
Yeah.
And be mindful of things like phishing scams, which are still prevalent even in this digital age.
Yeah, for sure.
But yes, overall, the security has definitely been enhanced.
Right.
Along with that, contactless payments where you simply tap your card or your device on a terminal.
Yeah.
They also offer that speed and that enhanced security through encryption. And I think one of the great things about both digital wallets and contactless payments
Yeah.
is the fact that your transactions are easily tracked.
Right.
So it can be really helpful for budgeting and keeping an eye on your spending habits.
Yeah, absolutely.
Now, of course, one of the, I think, most widely discussed alternatives to cash these days is cryptocurrency.
Right.
Bitcoin, Ethereum being the main examples that your sources use.
Yeah.
And, they explain this decentralized nature
Yeah.
of cryptocurrency and the high level of security provided by this thing called blockchain technology,
Right.
which is essentially a secure and transparent digital record of transactions.
Right.
So that decentralized aspect, I think, is very appealing to a lot of people because it means they're not controlled by any single government
Right.
or any single financial institution.
Right.
And that blockchain really provides this transparent and immutable, it can't be changed, record of transactions.
Right.
That makes it very secure from, that perspective. Your sources also mention the potential for lower transaction fees
Yeah.
than you typically see with traditional banking systems.
And I think one of the things that they highlighted, too, was that statistic about how Bitcoin has actually outperformed
Right.
a lot of traditional assets over the last 10 years.
Yeah.
Right.
And there's also this concept of, the limited supply
Right.
of Bitcoin, which there will only ever be 21 million Bitcoin in existence. Yeah.
So it taps into that scarcity argument that we were talking about with gold earlier.
Right, exactly.
But, I think it's really important, as your sources do, to also acknowledge the volatility
Yeah.
of cryptocurrency, those significant price
It
swings.
can be a roller coaster.
It really can be. So it's definitely something to factor in.
Right.
And I think it's also worth noting that the regulatory environment for cryptocurrencies is still evolving.
Yeah.
Right? It's a relatively new space.
Yeah.
So there are still some uncertainties in terms of how it will be treated.
Yeah. It's definitely something to keep an eye on as things develop.
Absolutely.
Now, finally, your sources mentioned these peer-to-peer payment apps,
Right.
which have become so popular.
Yes.
Things like Venmo and Cash App
Mm-hmm.
and PayPal. And
Yeah.
these are super useful for, just quick transfers
Exactly.
between people.
Yeah. The ease of use is a major draw there. And the fact that they often have very low fees or no fees at all.
And that versatility, I think, is a key point as well.
Yeah.
You can use them for all sorts of different transactions, splitting the cost of dinner with friends.
Right. Correct.
Sending money to family members,
Oh, yeah.
all sorts of things.
Okay, so we've covered a lot of ground here, looking at these different ways to potentially move beyond just holding cash.
Absolutely.
So now I guess the question is, what are some key takeaways for people who want to start putting these ideas into practice
Right.
and really thinking about their own financial strategy?
Right. Well, I think the first and most important point that all of your resources really emphasize is this idea of diversification.
Yeah.
Not putting all your eggs in one basket, so to speak.
Yeah.
It's paramount not to have all of your financial resources tied up in a single asset class.
Right.
So, combining different options like bonds, real estate, gold, maybe owning a business, even having a small allocation to cryptocurrency, these can all be ways to manage risk, right?
Mm.
Because if one area of your portfolio isn't performing well,
Yeah.
others might be doing better.
Right. And then I think you also had this concept of rebalancing,
Right.
which might sound a little technical, but it sounds like it's really important for maintaining that diversification.
Yeah.
And one of your sources had a good analogy about this.
Yeah.
They were talking about a fruit basket.
Right.
And they said, imagine you have a fruit basket
Yeah.
where initially you've got an equal number of apples and oranges.
Right.
But then, for whatever reason, the apples start to grow much faster than the oranges.
All right.
So now all of a sudden, your basket is, mostly full of apples.
Right.
And so rebalancing would be like selling off some of those apples and buying some more oranges
Right.
to get back to that mix that you wanted in the first place.
Exactly. Over time, different parts of your portfolio are going to, grow at different rates.
Right.
And your initial asset allocation can get out of whack.
Yeah.
So rebalancing is really about bringing it back in line with your target percentages for each asset class. And your sources talk about this thing called dynamic rebalancing,
Right.
which is essentially a tax-efficient approach. So rather than selling off assets, which can have tax implications,
Right.
you adjust future contributions.
Right, yeah.
You direct more money towards those assets that maybe haven't grown as much.
Right.
So that can be, a more efficient way to do it. And they also point out that accounts that have, certain tax advantages often allow you to rebalance more freely without having to worry about those immediate tax implications.
Right. And I think that brings up a really important point, which is that, everyone's situation is different.
Absolutely.
And one of your sources really emphasized that, what works well for one person might not be the best approach for somebody else.
Exactly. Your individual circumstances, your financial goals, your tolerance for risk.
Yeah.
These are all things that need to be taken into consideration when you're making decisions about your money. And I think the other thing that really can't be overstated is the importance of staying informed, right?
Right.
Continuously educating yourself about market trends, new investment opportunities.
Yeah.
And your sources actually provide a really great list of resources for this. Websites like Investopedia,
Right.
The Balance, Zillow, and Redfin, if you're interested in real estate.
Yeah.
Gold, silver, and JM Bullion if you're interested in precious metals, Morningstar, Yahoo Finance. So there are lots of great tools out there to help people stay up to date.
Yeah, definitely. Now, there was one piece that you sent that I thought was really interesting. It had a section called God's Money,
Oh, yeah,
which I thought was kind of an interesting title.
it is.
And it introduced some different types of assets that are often considered safe havens.
Right.
Come along, it's time to fly. financial journey, we're aiming high. Like, comment, subscribe today. Stay locked in, don't look away. Cashless compass, show me the way to a debt-free life starting today. No more stress, no more strain. Family, friends, we're breaking the chain. Chasing freedom, we're on the rise. Financial peace, let's reach the skies. Stay tuned, see what's next. Best content, nothing less. No more limits, no more fear. We're breaking through, the future's clear. Passive tips, income streams. This is the life, we're living the dream. Cashless compass, lead me to the top. Debt-free dreams will never stop. Passive income flowing, feeling so free. Happiness now for you and me. Hit that like, drop a comment, join the squad, don't miss a moment. Subscribe now, stay in tune, level up, wealth coming soon. Step by step, we're moving ahead. No more chains, no more debts. Building wealth, stress-free, no doubt. Cashless compass, we're breaking out. No mess, no stress, just pure success. Join the journey, we're here impressed. Cashless compass, you're finally free. A life of wealth and serenity. Push that content, algorithm tight. YouTube grind, we on the rise. Content creator, watch us thrive. Like, comment, subscribe today. See what's next, don't look away. Continue to watch the best around. Get rich now with cashless compass tips. Smart moves only, no chance we slip. Just strategy moving, no time to delay. We're building wealth, paving the way. Build Chad's tree, no way. Cashless compass, yo, what's next? Don't look away. Continue to watch the best around. Get rich now with cashless compass tips. Smart moves only, no chance we slip. Just strategy moving, no time to delay. We're building wealth, paving the way. No more limits, no more fear. We're breaking through, the future's clear. Passive tips, income streams. This is the life, we're living the dream. Cashless compass, lead me to the top. Debt-free dreams will never stop.